It's not often that a scion of a business family has run every one of their enterprises, large enterprises, and especially if they are very diverse. Like one of them is a consumer company, tyres, another of them is an infrastructure company, the other is an IT company. That's varied experience. It's also very surprising when that person looks like, he's just passed out of college. My guest today in Latha and the Leaders is Anant Goenka, the Vice Chairman of RPG Group and Vice President of FICCI. So he wears many hats for someone who looks like he graduated, 5 years ago?
No, it's been a little more, maybe about 20, but thank you for having me. Really a pleasure. And looking forward to chatting with you, Latha.
Well, thanks, Anand. Thanks for your time. But what was surprising about your career chart is you started in HUL, Hindustan Unilever. Why? I mean, you all had enough. You had KC, you had CEAT. Why did you choose to start outside? Was that father's instruction?
No, I think when I was in college, I did look at various options. I was personally quite keen to look at consulting as an option because I felt it's very intense and very good learning in a short period of time. I'd done an internship in consulting in my previous year and I was enjoying that. But then when I got the HUL opportunity, I think it's the best learning ground that one can get anywhere in the world, especially if we know we're going to come back to India. HUL, where you work in factories, where you get an opportunity to work in rural India, understand the consumer, so many different functions, such high quality people. I thought it just made, it was a great opportunity which I didn't want to miss, and I think it was absolutely an incredible experience.
No, as much a university training as Kellogg's itself. It's a university in itself. I take your point, but I admire the family quality to make people make their young start outside. So you can feel the rough and tumble. But speaking of Hindustan Unilever, what is your view on this onslaught of the fairer gender, if you please? I mean, now you've got Priya Nair, just before that, Prabha Narasimhan, Nykaa has, Falguni. Then, I mean, Nisaba Godrej has always been there, Isha Ambani has been there. A lot of women now.
It's amazing. I think it's such a great opportunity. I think they are great inspirations for women who very often feel that they get stuck at certain times of their career. But them having broken through the glass ceiling, I think it's a great inspiration for others. I think it's a challenge even in Indian businesses, including ours, where the number of women at senior levels is still very low. But I think they serve as embodiments of where people want to move to. Priya, Prabha, they're all dear friends. Priya was on our board, so it's amazing to see her move from her Indian role in India to heading beauty in UK and then back to HUL. So very inspiring.
It's fascinating. We are all looking forward to having her on the channel as well. But to come back to your other hat, let me first start with the macro and then come to the micro. You're taking over in FICCI at a fairly tough time for industry anyway. I mean, the uncertainty. Is your tariff going to be 15 or 20% is one uncertainty, and that's not all. What is the tariff that Brazil is going to have? What is the tariff that Bangladesh will have? All that will impact the business decisions. Are you expecting a lean period? What kind of impact on capex?
I think in the shorter term, certainly there's some uncertainty, and that's causing people to hold back a little bit on the capex cycle right now. But I think the decision making will happen soon. We are hearing of a mini deal happening any day soon now and a larger deal in a few months. I think India is very well positioned, and I think once something happens, we will be better positioned competitively to other nations. We know what's happened with China. All the Southeast Asian nations have also been taxed higher. There is a clear feeling of US wanting to target China a little bit more, and I think India has everything to gain. I think we've been also very proactive on FTAs with other countries. We have been proactive with the US. We are one of the few countries that have a good relationship with everyone, from Russia to the US and Iran and Israel. I think we are fairly well positioned. So I think it's a great opportunity for us to make most of it. And I think once some of this uncertainty settles down, I think we have a great positive opportunity for growth.
Yeah, once it's settled down, it's just that every time you think that, okay, once we get the deal done, and then there's something like, oh, if you're BRICS, then you get another 10%. Oh, if you're buying from Russia, then you will get some other obscene number. as tariffs. So more generally, even if the deal is signed, there will be this other broader uncertainty. Therefore, would you think that capex decisions or FDI inflows will perhaps be a year away?
I think once a deal is signed, things will be better. I also feel that there's some amount of uncertainty now we have to live with the leadership that's there in the US. What happens every day is completely uncertain, very difficult to forecast. And I think we just have to be more agile as companies. And as a country, I think the government is doing the right things, making ease of doing business easier, simplifying tax rates, putting money in the hands of the salaried class, and all of that will spur demand. I mean, our macros are so strong, inflation is under control. So I think over time, the demand cycle will lead to capex cycle picking up.
Okay. Yeah, will lead. That's the point. We are still awaiting the capex cycle.
Yes.
But
yes.
You are best placed to speak about the demand cycle because you've been hands-on in CEAT 2 terms in the company. But more importantly, do you see the PV demand, passenger vehicle demand, has not been very good for the most recent months? Two-wheelers have done better, of course. Tractors have done very well. What's your sense in terms of demand for tires? I mean, sectorally, I know you can't speak about a company.
Right. No, so sectorally, if you look at industry demand for tires has been at about 6-7%, close to GDP growth, and it generally follows that with a little bit of a lag here and there. I think if you look at overall penetration number of passenger car in India versus US, we are at about 30 cars per 1,000 population. US is about 800-900 cars. So that long-term story is very strong. Short-term, there are decisions that have been taken with respect to increasing safety norms, emission norms. If you look at small cars, the prices have gone up and therefore demand has plateaued. But for premium cars, SUVs, demand continues to be strong. So at a value level, I think things are looking fairly okay. I think it is generally fairly cyclical. There was great demand post-COVID that happened. And I think that cyclicality is playing out. If you look at two-wheeler on the other hand, there's a fair amount of positive demand, whereas maybe 3 years ago it was looking a little bit weaker.
Yeah, absolutely. Now, the point of cyclicality is taken, but I mean, since you are wearing a FICCI hat, is there any thinking on, reducing the BS6 standards for small cars? Because it's a long gap, from a 1 lakh motorcycle or a 1.5 lakh motorcycle to a 9 lakh rupee car is tough. Right. When the small car was 5 lakh, there was still an intermediate step. But any thing in the policy circles?
No, so from a FICCI standpoint of view, it's actually something which is taken on a little bit more by SIAM because they are the larger automotive organization.
But ATMA should be interested.
ATMA on the tire side, certainly we do a lot in terms of policy advocacy. But at FICCI's level, it is more in terms of reform, ease of doing business. And we have sectoral committees that handle a lot of this. But on the automotive side, actually it is CM that is the leading body in terms of working with the government on that.
But how do you see replacement demand?
Replacement demand is looking fairly stable. I'd say at about 7-8% growth. For us tires, we've outperformed the market. We are at about 11-12% growth. And so to that extent, we feel fairly comfortable. A lot of our focus has been on exports. So we are looking at international growth with respect to Europe and US in a very big way in the tire business.
That you took my next question away.
Okay.
I noticed your numbers that you are concentrating on export markets well. Will that be kind of challenged by the tariffs?
There will be challenges, or there have been challenges in the international market over the last year for various reasons. Supply chain disruptions that have happened. Depreciation of currencies in LATAM and a few other countries to a certain extent, tariff uncertainty. So there is uncertainty in the near term again. But I think again in the long term, India is a manufacturing base. If you look in general at the industry level, we don't have many global brands in India that exist. I would love to see CEAT or one of our companies becoming that global or first few global product brands. Because one of the complaints that many industrialists, I feel clearly, is that we are not a product nation. We don't have enough companies that are doing that. So if we can build CEAT into that brand, I would be, it's certainly a dream for me.
No, I mean, that's a great goal to have. Yeah. And now that you say CEAT has a better chance than perhaps many other products that I know of. But this year, do you think that you will also have the advantage of lower raw material prices? There seems to be a general disinflation in commodities.
Yes, I think the second half of the year should be better. Crude has about 40% of our raw material are crude derivative products. So to that extent, crude has come down from its $100 to maybe $65, $75 range. So to that extent, that is positive. Rubber had also peaked last year at about 200 rupees per kg, and that's seeing some slowdown, not too much, but irrespective, at least versus last year, there is a slowdown. So I think the second half of the year should see lower raw material costs for the tire industry.
Yeah. Okay, I wanted to speak about the Camso acquisition.
Right.
What drove that and what will it bring to the table? Because you're paying a pretty penny for it.
Right. So we are very excited with the acquisition. We still have going through the approval process, and once that is done, we will start getting more involved maybe in another few months' time. But we found from a synergistic perspective, it was an excellent acquisition.
Okay.
Camso is largely into compact construction tires. We bought it from Michelin Tires in France, but manufacturing in Sri Lanka, selling in Europe and selling in the US.
Oh.
So in an uncertain global world, it's certainly a tough time where there's so many countries involved. But I think what we found is that it is a premium product brand to the leading OEMs in the world. So I think to that extent, acquiring a premium brand in today's world is very valuable.
Yes.
Second is access to leading customers such as JCB, Caterpillar, and other leading construction companies. Access is very valuable. Third is we can use a lot of CEAT products now in the Camso brand and premiumize, have a two-layer strategy over the long term, get Camso to sell many more products and get CEAT to also diversify into this space. We've also been very excited about the off-highway tire space. So that's a much higher margin business than passenger car, truck, etc. So as we shift our product mix towards off-highway tires, I think our margin profile will also improve.
Oh, margin profile also.
Yeah.
How much do you think the output itself improves? And by when? Say, in the next 3 years?
So CEAT's revenues are somewhere around 12,000 crores. This will add about 1,500 to 2,000 crores to our revenues. And over time, that potential is higher because the capacity utilization of that plant today is at about 50-60%. So the upside without any investment is another 30-40% from the 150 to 100 million.
Levels. Yeah. Okay, let me just shift gear a bit. You know, India has been used as a base for global manufacture of tires by Yokohama, for instance. Do you see yourself scale up to that level, becoming the tire makers of the world, which is what Yokohama is apparently doing in India?
Yes, I think I absolutely see that. I think we do have a very clear advantage of lower cost manufacturing, raw material available out here. The cost of making in any other country and supplying to that country has very little benefit from a cost perspective. Okay, you're closer to the customer, you can supply maybe at a faster pace, but otherwise manufacturing in India is going to be, we are going to commit to continuously investing here. India has that potential of being the factory of the world in the future, and I think we can be a great base for tire manufacturing in India as well.
So any more inorganic moves?
Not now.
I know Camso is big, you have to digest it.
No, for CEAT, certainly not. I think we have enough to digest for at least the next couple of years.
Absolutely.
And then once we've seen success or taken that in, maybe something after that.
Okay, let me come to the big, if I can call it flagship. CEAT is as much flagship, but KEC is your real big money spinner. How do you look at the cycle over there? Because the Indian government is doing a lot of capex, but globally, oil prices are not to your advantage from the KEC point of view. So will global orders suffer this time? How are the next 2-3 years looking?
So we had thought we would grow more internationally about a year and a half, 2 years ago. But the Indian capex cycle, investment cycle has been so strong that we are finding that the T&D order book, which is actually our core strength in India, has been very strong. So to that extent, it's an area of comfort for us. We know we can execute these projects better than any other sector, and to that extent it gives us a lot of comfort for the near term. The order book is looking strong, but at a macro level, if you look, there is going to be a huge shortage of electricity around the world. Two trends are happening. One is AI, which is leading to many more data centers, which are huge power guzzlers. So there is going to be demand for many more connections and electricity connections to these places. Second is there is a shift towards renewable energy, where again grids are getting completely modified. In fact, some of the leading technologists have said that there's going to be a shortage of the bottleneck for AI is going to be the transmission grid. So to that extent, it gives us confidence that there's going to be a fair amount of investment, and anyone in the electrical space is going to see great demand. So, we are lucky that we are into cables, we have power transmission and distribution, and we have a joint venture with T Connectivity for energy products, a company called Rekem RPG. So to that extent, there's fair amount of tailwinds in this space.
Okay. No, there was someone actually saying that T&D space in India is like the Magnificent Seven in the US. I mean, it's like so much demand in T&D. But therefore, do you think that if you look ahead, there can be, the pace of growth can be much better than, say, the last 10 years?
The pace of growth has been fairly strong. If you look at our own growth, last year was at around 15+%. This year is also 15%, which is no small number in that sense. So we are seeing that positive shift. We've also moved into various other sectors. So we've grown in railways, civil, renewable, oil and gas. So with all of that, and then as you look at geographical growth in each of these, the amount of potential is fairly high. If you look at the overall infrastructure sector, if you go to a lot of common people and you were to ask which is, name the leading project EPC companies, I think largely it is L&T that comes to mind.
Yes, yes.
But I'd say that as KEC, if we can be at least a close number 2 with high quality, reliable, on-time delivery, safety standards and so on, I think that potential is enormous in a country which is maybe not even half built.
No, absolutely. I mean, there was a time when A.M. Naik said that India needs 100 L&Ts.
Yeah.
You know, there is so much work to
Absolutely.
do. So, you know, one more L&T is perhaps, you know, very, very much the need of the hour. But, you know, a funny thing I heard from the infrastructure companies like yours is that there is a labor shortage. Now, I'm not able to get that around my head. How come?
No, absolutely. That is a little bit of a conundrum. On one side, there is a little bit of unemployment, and on the other side, there is a labor shortage.
So is it skilled labor that is in shortage, or even unskilled whom you are willing to train are not coming for whatever reason?
We are finding some challenges in longer projects, in civil projects also, where that 8-10 month project long, earlier people would stay on for that period, complete the project and then go back. Now often when people go back home, they don't come back. You know, there is, whether it is the government schemes or the freebies that they get to a certain extent, they're happier at home, and then you have to again start the cycle again to recruit fresh people or the people with the necessary skills. So that is in part some of the challenge. We are working with large subcontractors to make sure we are able to
raising the wages is not an answer.
Of course, that's absolutely an option. I think how do we make their lives better on site? Small things like providing entertainment, quality of living. Anyways, as a large contracting company, we are very particular about good quality of living, but certainly I'm sure over time we can do more.
Okay, so that may be. Is the gig economy one of the reasons that labor is getting drawn?
Could be. I won't have the information to say whether they're moving to a Swiggy and the quick commerce kind of places, but very possible that there are
that could be a
new
draw.
Opportunities certainly coming.
You know, it's a good problem to have for the country that there are more jobs for our young people. But it was a little surprising. What is the pace of growth? Do you think that infrastructure can grow at 15%?
Yeah, I'm very optimistic. At least looking at the government capex cycle, things are looking very strong.
But you know, a lot of this also comes under the state.
Right.
And there have been complaints in the past. I mean, lately I've not heard so much of bills not being paid on time for various reasons. You know, either because of freebies or because discoms are not, you know, well funded. Are all those problems getting sorted at all? Are they better than like 10 years ago?
Yes, there are payments that are coming in, but they are delayed. So it is a little bit of a challenge. Our exposure to direct government contracts is at about 20%. So to that extent, Power Grid is a good paymaster, but at a state level, it is ad hoc and a little delayed.
FICCI is not able to take it up. I mean, I'm not saying for your company, but more generally, if government is the biggest capex spender and industry has not yet picked up the baton in full force, then the payment cycle can be an issue.
No, it's certainly an option where government can shift a little bit of expenditure more towards revenue and capex. Capex has a multiplier effect. improves, reduces logistics cost, provides employment. But maybe some shift towards revenue expenditure will help us at least.
Okay. Fair point. Okay, let me come to the one that is in the news now, IT. The TCS numbers have not been very heartwarming. Revenue has disappointed the street, though margins have been good. How are you looking at the IT space? You're, I think, hands-on in Zensar.
Right.
Until very recently.
Right.
You were the interim head.
Right.
How is the IT space looking? Is it going to be one more year of uncertainty and lack of execution?
Right. No, it's largely this uncertainty where people have, where customers have held back some amount of the discretionary spends, which has caused some headwinds. So overall, there is some slowdown that we are seeing. But again, I'm quite optimistic about the longer term story. I think the next 4 or 5 months will continue to be a little bit uncertain. We were hoping that after 2-3 years of some slowdown at an industry level, things will get a little better. But I'd say with the entire last 6 months, whether it is tariffs, whether it is risk of inflation, people have slowed down on discretionary spends.
Okay.
But with the entire shift towards AI, everyone continuing to invest in digital, in technology, those spends will be there for the long term.
Okay. Now, how is AI, is it a risk or is it an opportunity?
I think of it as an opportunity. I mean, there's so many technologies.
Is it already showing as an opportunity?
Absolutely. It's a very big part of our offerings. Okay. And now with nearly every offering, we embed AI as a use case or as a solution for our customers. And I think there are various areas building our own capability. We have to have fully AI enabled and capable people. How are we putting it as stories and opportunities for our clients to be more effective, and using AI in our own systems. So when we build products, are we using AI, finding more productivity and improvement in all of these processes?
So are good times 1 year away, you would think? Because I mean, I'm just going by the TCS number, which rattled the markets.
I would say, tough to say, but maybe 6 to 9 months things should start getting better.
Settle down
yes.
a bit. Yes. Okay, let me come to the more important, again, newsy bit. Glenn Saldana has, stirred up the pharmaceutical space by this selling of his molecule, getting an upfront payment, and he's going to do the research. Suddenly pharmaceutical is also a happening place in India. Tell us your plans for RPG. Will you all be RPG Life? What is the accent over there? Will you all be acquiring brands? Will you also go for R&D?
So RPG Life Sciences has been an excellent story for us in the last 6-7 years. Our margins were below industry levels at about 12-13%. That has now gone up to about 23-24% margins. Growth has outperformed the industry. So the story, value creation has been excellent.
Oh. Okay.
Going forward, we are looking at 2 or 3 areas. One is we have great brands within RPG Life Sciences, such as Naproxen, Lomotil, etc. Here we are looking at brand extensions and converting some of these brands into much larger brand sizes, crossing 100 crore kind of sales mark in some of these brands. So that is one. Second is entry into new specialty therapies, biosimilars, and chronic therapies. So I think these are some new areas we want to go in. Okay. And the bigger shift we want to make is that we are historically primarily in domestic formulations. We want to move more and more towards API. The active pharmaceutical ingredient market is primarily controlled by China and a small share in India. So again, as the world is looking at reconfiguring supply chain, looking at less dependence on China, we want to look at possibly some M&A also in the API space and look at high growth in that space. So
there's a PLI on offer in API, right?
That's right. That's right. So for us, we look at M&A and look at growth in certain selective molecules for India and the global market.
Okay, CAMS is not an option. I mean, doing research for global companies.
It is an option. It is an option. I'd say that these are the first few steps, but over time, even things like CDMO, etc., we will look at a step-by-step way. Yeah.
Actually, you're in absolutely 4 different areas of operation. Of course, you all are way ahead in construction and in tires, and compared to that, Life Sciences looks like a smaller company, and Zensar looks smaller. But which do you see as your growth horse or growth horses?
I think we have to work towards keeping all as growth horses. And the reason is we have to find, if there is a slowdown, if there is a trend which is not favorable for an industry, we have to work towards finding either geographical growth or growth in new spaces. And to give you an example, we looked at in tires, we said, okay, what are the future S curves in the larger mobility
yes.
spaces? And we have access to a lot of fleets. We said that the biggest challenge fleets face is their fuel cost is fairly high. They work on a few rules of fuel, of how much fuel gets utilized. Say Bombay, Nagpur and back, there are X number of tanks. But that's how at a high level. Now with sensor prices coming down, we've installed telematics and sensors in all our fleet customers, put in a back-end SaaS model where they have a lot of visibility of is fuel getting stolen, what are the habits of the driver, how can we work towards reducing fuel cost. And that itself...
This is part of CEAT or is Zensar doing it for you?
No, it is part of CEAT, but run by a separate CEO, but everything within CEAT, but over time it can become a separate company. Now you may say tire industry is growing at 7%, but this area can grow at 20, 30, at 100,
so you have a startup within your legacy.
So exactly, whether it is startup, finding these new trends that are there for growth is something that we will continue to work towards.
Okay, but will you enter another line of business? I mean, these are 4 varied lines. So you know, you're confident you can manage this kind of variety. Will there be anything that will attract you?
Yes, I
having
think
way
so.
out like Swiggy or Ola.
Absolutely. I think we do keep looking at M&A even which is unrelated once in a while, and we are open to doing that. We feel that the few rules that we follow is one is that again, is there a future trend of long-term good growth in that segment, and does it marry with our capabilities? And our capabilities, I would say, would be in distribution, manufacturing, branding.
Yes.
So somewhere our capability with a great M&A opportunity, we would look at that, and it should be an S-curve. So say something like circularity is an exciting area for the future. It may require our strengths of manufacturing. Why not look at something like that? So similarly, any exciting consumer business, that could be something interesting. So we may look at some M&A once in a while, as and when, you know.
Give me a more specific sector. Circularity and consumer are large names. Would there be anything specific that?
I think that's, we don't have any idea beyond that level of detail. So we would be working with bankers, thinking of what next, and very open. It depends on what the opportunity comes, and if it fits in and it's of the right value, we may look at entering a new sector.
No, it's very good to have people with so much hunger for starting new lines of business or expanding existing ones. What are your management rules? I mean, do you have a thumb rule about interest serviceability? I won't borrow beyond so much. Or do you have any other thumb rules? Finance or non-finance?
On the finance side, I think there are certain thumb rules as to how much debt we will take on. So, you know, your debt EBITDA ratios or debt equity ratios, let's not go beyond that. We'd rather sleep well at night than look at some kind of abnormal growth. So certain rules on the finance side, of course, we have, and similarly for other metrics. But yeah, largely the way I operate is, for me, values and culture of the organization are very important. Values in the group are unleash talent, touch lives, outperform, and be happy. Now within these 4, we do spend time in making sure that are we really living these values. So while me in a role as vice chairman, I have great CEOs under me. So my role is to make sure I have the right people under me, high quality people, and then I spend time with on making sure some of these things are happening. Are people who are working in RPG happy? Are we making sure that our customers are happy and we are adding value to them? So I spend a lot of time meeting customers, time with the external world, whether it is investors, bankers, and so on. That also helps. And then internally, I would spend time on only the 3 bold moves of each company. So I'm a big believer of the Pareto 80-20 kind of principle, that 20% will bring you 80% value. So let's just spend time on that, and if that happens well, you should be in the clear.
Okay, that's a great point on which to end this conversation. But I just wanted to ask you a little bit on your family.
Sure.
Yours is one of the happier instances of, you know, your uncle and your father amicably taking different businesses. But you have Harrison's Malayalam, where you said that, you know, both of you jointly manage. Do you have any plans for that? I mean, I know in terms of stock market interest, it's small, but it's a very beautiful thing. I mean, it lends itself to tourism, Any plans, with both families wanting to expand that?
Right. So I think a part of the company, half the company is run by my uncle's side of the company and half of it is run by us. Here we are looking at, so it is a beautiful area, and if you've not visited, you must make a visit to the plantations in Kerala. It is a small business with a lot of land actually that is there. And here what we are looking at is, one is we feel that there is going to be some rubber shortage in the world. And so the potential for the rubber industry is fairly good. And on the tea side, we are continuously moving towards higher quality orthodox tea. We hope to work with the government to get more tourism to be allowed, for us to look at some partnerships where that can become a newer source of revenue for the company. And the third is beyond tea and rubber into other products, pineapples, avocados, and new planting crops for these areas. So that's largely how we are thinking of future of HML, at least in our part of the business.
Well, I happen to belong to Kerala. That is why my ancestors are from Kerala.
Yes,
so
sorry about that.
we have seen some of your plantations. But these are very, very fruitful ideas. And I do hope they all bear fruition. Thank you very much for spending time with us.
It was lovely, Latha. Thank you for the time and pleasure talking.